You're welcome to the Economy and Politics Show. I'm Ottoabasi Abasiekong. This edition of the show will discuss 2024 recapitalization, assessing the public offerings and right issues of banks. And my guest joining me virtually is Mr. Sam Onukwue, the chairman of the Association of Stockbroking Houses of Nigeria, ASHON. It's nice to have you on the show, Mr. Sam, after a while.
Thank you so much. Good to be here with you again.
Yes, thank you. Let us begin with your assessment of the current recapitalization exercise. So far, we've seen 5 banks already leveraging the markets for either the public offerings or the rights issue. What's your assessment so far?
First, let me say that the recapitalization exercise is a very welcome exercise. It's a very welcome development. For a very long time, we have the primary market has been a bit quiet. But with the recapitalization of banks, we are beginning to see activities. Obviously activities have come back to the primary market. So first, it's a welcome development. Well, of course, the race is in response to TBN recent directive that to that effect. And like you said, about 5 banks are in the market, and we're expecting a lot more in the market.
Yes.
Yeah, first, it has kickstarted activities in the primary market, and which has remained very dormant for a considerable length of time. Banks are at liberty to deploy any of the range of financial instruments to increase their capital base, especially rights issue. So far, so good. We believe that with the numbers, what we're seeing in the first 4 or 5 that are in the market, we believe that market has shown us a lot of resilience, its ability to absorb the deluge of the offerings. So the market has been waiting for it. So the market is really prepared and has taken up the gauntlet.
Very interesting, because like you rightly said, we've seen 5 already, more are coming, but so far the absorption has been very interesting. An interesting part of this recapitalization, because the last time we had it was 2004 to 2005, is the NGX e-offering digital platform, designed to simplify the process of participating in the bank's public offerings. Or yes, how are stockbroking houses repositioning to derive value from this innovation? I also understand, and you issued a statement about the need for compliance with the whole process, if you want to speak into that too. But how is the stockbroking houses, how are they receiving this innovation from the NGX, and also your recent statement on compliance with the whole process?
The introduction of the e-offering digital platform of NGX has come as a game changer. And I must say that the NGX didn't do it in isolation. They carried the market along. They carried our members along, ASHON and our members, of course. And we all reviewed the digital platform and agreed that that's the way to go. Leveraging from the success of MTN of IPO, which was driven by the e-offering. The digital platform, in our view, will speed up the processes and they eliminate a lot of paperwork. It will also encourage our digital natives, the millennials, Gen Z, Gen Alpha, and so on and so forth, to participate in the market. We believe that it will also provide efficient and seamless processing, of the rights of public offers that will be for stockbroking companies. And as such, other capital market operators, as well as issuing houses and registrars, especially with regards to reconciliation, allotment, and minimization of unclaimed dividend. Particularly, I believe it will address this issue of unclaimed dividend because it has taken into consideration those issues that have always been of concern to registrars. That is authenticating the identity of the individuals, as well as the bank details, the right bank details. Now the system is designed to capture all of the customers' bank details, BVN, and so on, such that they shouldn't have any difficulty in getting their dividend as and when due. With regards to the statement we issued, yes, we observed some developments that we considered not very healthy for our market and not in consonance with what we expect at this point in time. And so we had to draw attention to some of those issues in that statement. We believe that those concerned have taken serious note of our observations.
How is the current high interest rate regime impacting the equities market and business activities of stockbroking houses? I mean, ASHON definitely has to survive. The environment has to be enabling, and we have, a challenging interest regime in the country. How are you navigating it?
Well, naturally, you know that when there are changes in monetary policies, especially as it affects interest rates, it's in one way or the other impacts activities in the equities and bond markets. We have seen a rise in interest rates, and every investor, everyone that wants to make an investment, is looking for commensurate return. And so, at a time like this too, they're also looking for safety of their investment. And so we have seen the natural swing from equities to fixed income or even bank placements, and those who also understand the way the stock market works will want to remain in the market, because the market obviously has continued to beat inflation over time, and this is a place to be. So it depends on investors' preferences in the long run. Well, I mean, you know that a rise in interest rates triggers cut in consumer spending, and this also affects all businesses. It's not just a stockbroking business.
Yes.
And this has the potential to create bearish markets in our own, as investors may dump shares to realize cash for domestic and other use. We believe that the central bank raise interest rates to minimize spending, and slow the rise of inflation and lower interest rates to stimulate economic growth. Again, movement of interest rates and investment in equity operates inversely. That's very well known. So the stock market will continue to react to interest rate changes because it affects investors' expectation of stock market performance in the future. Nevertheless, we are also concerned because the companies that we have listed there also access the money market to be able to meet their working capital requirements. And if their cost of operations rise as a result of high cost of borrowing, it might affect performance in the future. So that's the bit we are concerned, and we appeal that the monetary authorities should take significant cognizance of what's happening there, and maybe taper the interest rates going forward.
Yes, that is for September, when the next Monetary Policy Committee meeting will hold. We'll watch to see what will be the take of the central bank. But let's look at what you raised earlier, the issue of unclaimed dividends. It's also a very huge concern for the apex regulator, the Security and Exchange Commission. It's said that, like you just rightly said, the issue of identification of investors is something it hopes to tackle. And of course, if you look at it, the unclaimed dividend figures have increased, to about over 200 billion region. So in 1 minute, can you tell us how the ecosystem can work to ensure that this tide is stemmed from the ASHON CIS to CSCS, that's the Central Clearing System, and of course the apex regulator and shareholder groups?
Yeah, I must tell you that the issue of unclaimed dividend has been of very serious concern to both regulators and operators alike for some time now. We appreciate the fact that investors, investors would like to take advantage either of capital appreciation or dividend for liquidity purposes. And so it's of concern to us, even as operators, to ensure that the interest of investors is sustained in the market. Yes. Well, for us and the regulators, a lot of efforts are being made. A lot of efforts are being made, even before it became an issue in the public space. You will recall that sometime in 2022, the Securities and Exchange Commission insisted that all accounts with CSCS must be updated to include bank investors' bank details. Which the CSCS passes to the registrars. To ensure that dividends are paid promptly. That exercise started and it's been moving on well. And we have also reviewed the situation with registrars. And the observation is that registrars, there are a lot of legacy issues, which will take a little bit of time to untangle. But efforts are being made to ensure that going forward, we don't have, the current level is reduced, and going forward, we don't have so much accumulation. I can tell you that. Efforts are being made. I'm sure before long, those efforts will begin to yield results. Our appeal is that government should slow down on this unclaimed dividend fund that they want to establish. We appeal that they should slow down on that, because we don't want to get to a situation where investors will be discouraged from making investment, because it's not in the interest. We're trying to build up investor confidence, and we should do everything possible to ensure that is not affected by any policy decision.
Yeah, the investors' interest must be protected. The Securities and Exchange Commission,
absolutely.
The Securities and Exchange Commission, under the leadership of Dr. Motimi Agama, has said they're going to really tackle this. The unclaimed dividends for our public is 215 billion now, and they are promised to tackle this and continue to track how that is being addressed. As we wrap up, Mr. Onukwue, what is the outlook for the fourth quarter of 2024? How do we see the year ramp up in terms of the capital markets? What will be the possible drivers and risk? If you can take that for the next 1 minute.
For us, we believe that the first half of the year has been quite interesting. We've seen some impressive performance on the NGX. NGX, of course, was adjudged Africa's best performing market. We also anticipate a positive outlook for equities in the second half of the year. We expect improved corporate performance and forex liquidity, which can, of course, bolster investor sentiments towards equities market. But it might be a mixed performance depending on macroeconomic situation in the second half. We expect that with the new listings and ongoing recapitalization, the banking sector may stimulate more interest in investors in the market. It's interesting that most of the banks, in presenting their reports, informed us of, the general public, that is, investors, that some of them have been paying significantly lower, and they have been retaining so much in the business. We know banks that pay about 25% of their earnings, some pay much less. And so what that means is that they have enough buffer even to pay more going forward. And they have promised us in all some of the engagements we had with them when they came for funds behind their offers. And we know that given the position of banks in the market and the current ongoing recapitalization, we believe that the second half would obviously be better. We believe also that as being projected, inflation may drop, and the monetary policy may also begin to move towards a favorable market condition.
Thank you very much, Mr. Sam Onukwue. Of course, when you look at the latest GDP results or figure, yes, you will see that the banks, the finance and insurance, despite all the pressures and everything, turned out huge double-digit growth, 28.97%. That's really showing how resilient the sector is. So we expect to see a lot. And also, Mr. Sam, you can keep tabs with the ProShare Recapitalization Watch every weekend. Do that analysis, and of course, very rich for the entire market to follow. So thank you once again, Mr. Sam Onukwue, Chairman, Association of the Stockbroking Houses of Nigeria, for this interesting conversation. Thank you once again.
Thank you for having me. Thank you.
Yeah, thank you. And that was an interesting conversation on the 2024 recapitalization, the bank's public offerings and rights issues, assessment of them, and how it's playing out so far. 5 banks have already engaged the market on their plans, some combined offer, some public offering and rights issues, just to build up with the requirements of the Central Bank of Nigeria for the 2024 to 2026 recapitalization exercise. So much to unpack from how this is turning around the markets compared to 2004, 2005 experience, but a lot of takeaways in terms of the need to further strengthen cooperation and compliance, and also to ensure that this digital process being brought on by the NGX continues to create more opportunities for new investors to come on board. Also, to our viewers, if you want to get further insights on this conversation, visit the ProShare website displayed on the screen. And like I shared with our guests today, we have the Recapitalization Watch that comes out every weekend. Just visit our website and get it, very rich with infographics that gives you analysis of how the banks are performing in this period as they are recapitalizing. Also, you can follow our activities on our social media platforms displayed on the screen. Rich reports, insights around the economy, financial markets, all in one tap, because of market intelligence that gives you future trends and insights on what to expect in the market and economy. Until we come your way again, enrich yourself with the knowledge of socio-economic developments around you, because it is wise to do. I'm Ottoabasi Abasiekong. Thank you for watching, and bye for now.